I want to start out by asking, why does investing work? The older generation seems to be convinced that investing is a smart idea because over time it's been proven that putting away money into stocks and real estate makes people rich over the long term. If you just wait it out, you're going to get very rich for doing absolutely nothing. In fact, I'm going to show two charts here that show that if you had invested money in the San Fernando Valley real estate market around 1960, you would have made about 100 times your money just for waiting. If you had invested in the S&P 500 around 1960, you would have made well over 100 times your money. Probably the single most important reason for these spectacular investment returns over the last 50 years or so is that the financial system is structured in many ways like a Ponzi game, which makes it easier for earlier generations to become wealthy than for later generations. But there's one chart in particular I want to show to demonstrate why the promise of investment returns is likely to be an illusion, and that's a chart of the money supply growth. If you look at it, you'll see that over the last decade or so, the average year-over-year increase in the money supply has been around 10%. Now it's been higher than 10% and less than 10% some of the years. But for simplicity, if we say it's been roughly 10% for the last 10% a year for the last 10 years or so. So if you had invested money in a savings account earning 1% a year in interest, then according to the IRS, that 1% would be considered income. So you have an investment gain. If you think about it, however, the amount of money that's in existence has increased to such an extent that you have lost over a period of 10 years well over half your money. And for this reason, this chart by itself illustrates better than anything why in the game of investing the odds are going to be stacked overwhelmingly against you. So if you believe in the validity of this chart, and you can find many other charts, similar charts on the internet, which will all show pretty much the same thing. There's not much dispute in the world as far as how quickly the amount of money and credit in the economy is growing. If you believe in that, then even if you had managed to, let's say, double your investments by investing in the right stocks or in the right real estate over the last decade, let's say, you still wouldn't come out ahead in investment terms. You would come out ahead, and overwhelmingly so, if you compare your investment gains to the price of everyday things that we buy, including food. So the price of food and the price of beef hasn't changed much over the last 10 years. But that's really a function of where the money is currently at in the economy. The money is still in existence. It's not going to be destroyed. So it's really just a matter of time before the holders of the money are going to bid up the price of everyday things like milk and beef. For this reason, the Orthodox view of the financial markets is that since a lot of money is being printed in the world today, and you are not one of the recipients of any substantial amounts of that free money, the odds when it comes to investing, the odds of recovering what you lose as a result of the dilution of the US dollar is going to be difficult, if not impossible, to make up. Therefore, if you are young and poor, the smart thing to do is to not try too hard to become wealthy or to save money, because generally speaking, you're going to be expending a lot of energy to obtain a tiny piece of the economic pie. And if you are old and rich, the smart thing to do is to spend the money now while you still can, while you can still get value for it, and enjoy early retirement now. If you want to preserve wealth for retirement, the smart thing to do is to prepare to lose, because ultimately there will be more losers than winners at this stage in the Ponzi game. But having prepared to lose, I'm going to dedicate this channel to find ways to win. But that should not be considered the base case that we want to rely on.